What is going on, guys? Welcome to Stock Talk with Nico Criticos. Today, we are taking a look at Rivian stock because the stock is now up over 12% today. And it's hard to pinpoint exactly why this is because there's so much things going on in the news right now. The main thing that sticks out to me is the fact that they're teaming up with Volkswagen, but that's not really a new piece of news this morning. So that's why I'm not sure if it's really related to that or is it something else. You have other things going on, like they're in a lawsuit with Tesla over them pretty much stealing employees from Tesla to get electric vehicle secrets and all this stuff. So there's a lot going on with the company. Some good news, some bad news, right? But if we look at this company's financials the last couple of years, we can see that the last couple of years they had a huge jump in revenue, right? They went from 55 million 3 years ago to 4.5 billion last year, and they're expected to do about 5 billion this year. But the problem is net income and free cash flow have been getting worse pretty much. We're looking at negative $5.5 billion of net income for last year. And when you look at what analysts have them doing, they're expected to lose $4 EPS this year, and they are expected to lose negative 260 next year. Revenue is actually expected to jump up a little bit. It's going to grow 5% this year and then 13% next year. So that's some good news, I guess you could say. But the main problem is that the valuation is at 12 near it's over 12 billion. I think it's 12.5 billion or something. And the company is losing money. So that's why I don't really see, I don't know. I'm not willing to pay a valuation like that for a company that is probably not going to make a profit for at least 3 or 4 years. And so I will not be buying this stock anytime soon. But I think they have good partnerships. I think they have a chance at being a small EV player that maybe takes 3% of the market share or something like that. So it's not necessarily a horrible investment. It's just for what this company is at the moment, I don't think it's worth $12 billion. If we look at their balance sheet, we can see that the cash to debt ratio has actually been getting worse. And that makes sense because they've been losing more and more money, making less revenue. So now we're looking at 9.5 billion in cash, 4.5 billion in debt, which is honestly, it's not a horrible ratio. That's honestly better than some other companies. So that's not horrible. It just looks bad compared to the 18 to 1 billion ratio they had 3 years ago. So that's pretty much all I need to say about this company. They have some good things going on. Like, I don't think they're going bankrupt or anything soon, but they have a long ways to go before they make a profit, and I don't like that. And they're trading at a $12 billion valuation, which is just too much for where they're at in their trend right now. So I'm not interested in buying Rivian stock, but thank you guys for watching. Comment down below what you think, and I will see you in the next video.